What's going on, my fellow wealth creators? Matty Ice here. I wanted to share an awesome conversation that I just had with my friend Jack Kreider from the Financial Mastery Simplified podcast. It was a really, really good conversation centered around answering the question, is it the right time to buy a house? And this got a little personal for me because this is a big part of my journey overall, but also the recovery process from the completely disastrous financial situation that I created for myself a few years back. I've since mostly recovered from it, but we use that story as the basis for the conversation. And Jax is actually a professional in the mortgage industry, and so she provides some really, really good feedback and a framework for helping to determine whether or not it's a good time to buy a house. I think a lot of people are asking that question right now, particularly because interest rates are a little bit higher than what they've been in the past. Also, home prices have been absolutely skyrocketing. So home ownership is becoming further and further out of reach as monetary debasement continues to get worse and worse. These houses get more and more expensive, and our wages are not keeping up with the inflation or the inflation of asset prices like homes. So we can't afford them, right? So naturally, the question comes up, is this, like, should I buy a house now because I might not be able to afford it in the future? Or should I buy a house while the interest rates are high? Like, these are questions that people ask that are important, but sometimes a lot of the times those types of questions are just surface level questions that need to be answered. You need to do more self-reflection. You need to ask a lot more questions about your specific goals and situation to really come to a determination based off of like actual facts and information about your situation to be able to come to that decision whether or not it's a good time to buy a house. All right, so fascinating, just absolutely fascinating conversation. Strongly recommend that you stick to the end. Make sure you check out all of the resources that Jax provides. If you want to connect with her, check out her book and all that stuff. I do want to mention that I was having some internet problems, unfortunately, while we were having the conversation. So the video quality on my end is not very good. So I apologize about that, but nonetheless, the conversation is absolutely worth listening to. So I hope you enjoy. We'll see you soon.
All right, we're live. What's going on, my fellow wealth creators? Matty Ice here. Welcome to another podcast episode for the Millennial Wealth Creator Podcast. I have my good friend Jax Kreider from the Financial Mastery Simplified podcast. We actually had what I believe was a really good conversation, just centered around personal finance and building wealth and just kind of our different perspectives on it and our different journeys. And I loved it so much. I was like, I got to get you onto my channel to continue the conversation. And so first off, welcome, and really appreciate you being here. I'm looking forward to this.
Absolutely. Well, thank you so much for having me. For those of you who don't know who I am, I'm Jax Kreider. I run a podcast called Financial Mastery Simplified and kind of a business called that as well as what I've done for well over 20 years is run and work in mortgage. So I run PBJ Mortgage, where we're making mortgage simple, as simple as making peanut butter jelly sandwich. So all the things financial, I love them. I love to talk about them. I love to help people. So I'm excited for this conversation for sure.
Me too. So what I wanted to do with this conversation or this podcast episode is dive a little, like continue the conversation that we were having, which guys, if you haven't checked it out, I will link to the podcast that our first podcast that we did on Jax's channel. I will link that down below. Make sure you check it out. It was a really good conversation, but I want to continue that conversation, just dive into something a little bit more specific for this episode. And what I'd like to do, because you've been in the real estate market for a long time, and again, just the conversation that we had around that, like before and after we were live as well, where you were talking about different mortgages and how it works and stuff. It's like really, really, really powerful stuff. And what I want to do is answer the question that I think a lot of people have, not just now, but in general, as they start to progress in life. The question is it the right time to buy a house? And the reason I want to answer this question is because it's very personal for me, where it's one of the things that actually screwed my life up so bad, because I actually purchased a house when I was not ready for it, even though it was the best time. I mean, literally one of the best times over the last 50 years to buy a house. And so what I want to do is start with just go into provide the some context around that story. And then I want to get your expertise on it, your thoughts on it. Like, what were the red flags that I missed? What are some things that people need to pay attention to and really look into, not just when it comes to interest rates and the cost of the home and stuff like that,
For sure.
but really doing some reflection on themselves as well, asking themselves very specific questions to actually determine if they're ready for a house. All right. So
For sure.
here's it's so crazy. This was back in 2009. Okay. Where I bought my first house, and I was so proud of it too, because I was only 21 years old when I bought my first house. And I think that was a big part of the decision, even though I absolutely was not ready to buy a house because I didn't have the financial education. I didn't have the financial foundation whatsoever. It was just at that time, the real estate market was starting to bottom. They had the first time home buyers program where they covered my down payment. They sent a $7,000 or $8,000 tax credit check afterwards. So I got paid to buy the house. Right. And I'm 21 years old, and I'm getting all these accolades, and like everybody's probably like, oh, he's such an impressive young man because look at him. He's doing so well. He's buying his first house at only 21 years old. Like, how impressive is that? So there was a lot of ego involved with it as well. Here's the thing. Here's what's so crazy is I bought the house for $79,000. 3-bedroom, 2-bath house, 1,600 square feet. Like, those, when I say that, those were the good days of buying a house, right?
I know. Yeah. Everybody wishes we could find that now. Let me just tell you.
It's non-existent, right? And I remember, like, my mortgage was less than $600 a month. Okay. I rented out 2 of the rooms to my brother and one of our friends, right? So I had income coming in, right? My interest rate was actually kind of high. It was like 5.75%, but
that's not high, but okay.
Well, comparatively speaking, like where people got 2 or 3%, they would call that high.
For sure.
Right? But I mean, it was literally the best opportunity to buy a house, right? And yet somehow I still screwed it up. And I'm not going to go into all the details of what happened, but long story short, I continued to make a series of bad decisions. I was just so bad with money. Of course, I didn't realize it at the time, but as the years progressed, I ended up quitting my job at the time as a barber and hairdresser, right? Which I was doing okay. I wasn't making great money, but with that low of a mortgage and all, it wasn't that bad.
Yeah,
but
absolutely.
I made a decision one day to just up and leave, right? I moved to Las Vegas, thought it would be okay, thought I had a plan. That plan did not work out at all. And somehow, even though I still had the house rented, very low mortgage, it only cost me $79,000. I still somehow lost my house to foreclosure.
Yep.
And when I look back at how perfect that opportunity was, and knowing what I know now, it's like, how on earth did you screw that up? Like, that situation couldn't have been any better for you. And, I look at it like at least once a year, usually it's twice a year. I'll look up the price of the home. You know how much that home's worth now?
300-ish.
The last time I checked, $224,000.
Okay.
It's 3x.
Yeah.
And it's actually the inspiration for this my sleeve right here. So it's the Phoenix rising from the ashes, but I have Roman numerals right here that are it translates to 8705. That was the number of the street address for the house. So that every time I look at this, it reminds me of that journey. And so that's why I want to answer this question. And I really want your input on the story I just told you, some of the red flags that you probably have seen 100 times with people that you've worked with that indicate maybe they're not ready.
Yeah.
How did I screw that up so bad? And when people ask, is it the right time to buy a house? Given the story I just told, give me your feedback on that. What's your answer to that question?
So first of all, I want to give a little bit of context in the sense that in the period when you were buying this house, I actually worked for the largest mortgage lender in the country, which at the time was Countrywide. I was in a call center. I backed customer service. So what would happen is if you wanted to possibly look to refinance or do something like that, customer service would send you to me. And I was doing heavy education with people, because what I was recognizing and realizing was so many of these people who had bought houses had no idea what they had signed. They didn't understand what it was. And so, yes, the 0809 crisis was created by a lot of different aspects. Okay. It was not just one thing. Okay. But what I think the housing crisis specifically had a few main components. Component one was you had a lot of people that only cared about the bottom dollar. So they were not experts in their craft. So the mortgage people were caring only about money. And I get it. There's a lot of greed, and we can make a lot of money in our space. So that was creating some of it. And then lack of education was number two. And I vowed every single person that got on my line, because I knew most of them I likely couldn't help because their houses were upside down or they didn't make enough money or whatever was the situation in this particular scenario, that I would educate them in some way before they got off my line. That was my goal and my aim. And I have held true to this with every transaction that I've ever done in the course of my career, because the biggest key and the biggest reason I think that people are not ready to buy houses is because they don't have any of the education piece. You don't have to be a genius. You don't have to be an expert in the mortgage space, but you do have to be diligent enough to understand like how the process works, what it looks like, what are the big rocks, what is it, what matters, am I in a good position? And then you also have to be able to pick an expert who is going to be in your corner that way. It frustrates me hugely because people get really trapped up on rate. And it's the only thing they want to see because they've spent literally millions and millions of dollars to stuff down your throat as a consumer, that rate is the only thing that matters. And the truth is that is not true. I'm not saying the interest rate doesn't matter. So don't think, oh, Jack said, who cares what the interest rate is? That's not what I said. I said, it's not the only thing that matters. Having somebody who genuinely cares about your situation and where you're at in your scenario matters equally, if not way more so than the interest rate. Because I have told people, hey, I don't think you're quite there yet. I think we might need to take a pause in this experience to get you to a better place. Because yes, granted, I'm kind of shorting myself because we're not getting the money then, but it doesn't matter. Like, I want you to be my customer for life. I want every single house you ever buy that you're like, man, she took care of me. Like she cared about me, understanding my process. Like, it's such a huge deal and it's so underlooked. And we live in a day and age where there's more information than you can possibly imagine, right? Like, you have it all at your fingertips. The problem is that people, when they buy houses, it's a very emotional decision and they're making it from a very emotional place. And I'm not saying that emotions are not why we buy. They are why we buy, but you still have to take a pause and step back and say, okay, do I understand what this looks like? And am I ready to go into it? Because if you're not, you will crash and burn. I mean, in my opinion, it's not if, it's just when.
Yeah, which is exactly what happened to me. There was so much good stuff in there. There are two primary points that I want to expand on a little bit. First off, you talk about like like people get hung up on the interest rate, right? And I think that's one of the reasons why people are like ask this question: is it the right time to buy a house? Because interest rates are high compared to what they've been. Maybe it's not a good time, right? But to expand on that, buying a house, it's not just about the numbers.
No,
because if it was, I'd still have my house right now.
Right.
Because it was the perfect time.
For sure. You're talking about like from the market perspective and
from the market perspective, the
absolutely.
price, the cost of the house had declined significantly. There was nothing wrong with the house. My mortgage was really low. Like the numbers made sense. But it's buying a house, making that type of commitment is so much more, at least this is what I've learned, than just the numbers. The numbers are important. You need to consider them. Okay. But it's not the only determining factor. And that kind of leads me to the second point that I wanted to just expand on and address a little bit more, is you mentioned having a professional in your corner.
Yep.
And I think about, look, the people that I worked with at the time, not bad people, just doing the best they can with what they knew at that time, right? I don't think I was misled or anything, but I'll tell you what, Jax, I didn't have a single person ask me, hey, have you really thought about this? Is this really the decision that are you ready to make this decision? I didn't even ask that question myself because I was so blinded by the numbers.
Yeah.
Right. And that it kind of ties into with what I do with, setting up policies, whole life policies for infinite banking and stuff like that. Like the person
For
you
sure.
work with is probably the most important part of the entire process.
100%.
Because if you don't have a professional that is on your side, that's educating you, making sure that this is the right decision, knows how to ask those questions, the numbers can look great on paper, but if you're not ready for it, it can be a complete disaster. So I wanted to address that part too, like because the realtor I was working with didn't bring that up. The mortgage, the loan officer didn't bring it up. Heck, the people that were, just in my social circles, I'm like, yeah, bye. Like nobody asked that question. And of course, I'm an adult. I made my decision. I take responsibility for it.
For sure.
However, it would have been nice to have somebody maybe like you say, hey, Matt, based off your finances, what you've told me, et cetera, this might not, the numbers look good, but it might not be a very good decision for you. It could cause problems later on down the road.
Well, or they could push back up against you and say, look, if you are going to make this decision, you may need to think about shifting some of these other aspects. Because sometimes it's not always the worst decision to push yourself into the uncomfortable, right? Like, I feel like, especially millennials, because a lot of us had kind of grown up in this 0809 crisis meltdown, fear mongering kind of environment, that now it's like we need everything to be perfectly aligned before we make the call. Sometimes you do have to step out a little bit into the uncomfortable, but in my opinion, you need to have a lot of self-awareness, right? Like you need to step back and you need to be asking yourself, hey, where am I at? Right? Like I tell people all the time, okay, so what is our 2-year, 5-year, 10-year plan? Like, what does this look like? I understand that life's going to change and like sometimes stuff happens and you can't, prepare for everything. You can't prepare for all when life is lifing, right? When it's just kind of throwing grenades into the situation. But what you can prepare for is if hey, we really don't have a desire to like live in this area for more than maybe, 18, 24 months. Okay, well then why are you looking to buy a house? Unless you're trying to make an investment, like where you're doing an investment property and you're looking to actively have a rental portfolio and that that's a desire of yours, you want to further this, I'm going to tell you probably not the best decision, because whatever equity you may build via either paying down the loan with your payments and or just the natural rise of house prices, right? You're probably not going to make enough to cover the closing costs that you're going to have to pay as a seller, the realtor costs and things like that. And there's also a lot of confusion around that too right now. We have a lot of misconjecture because there was a big lawsuit that came out. If you saw, the NAR lawsuit was like a huge deal because sellers were like, I don't want to pay the buyer's agent. And technically in the state of Texas anyways, you actually were never required to. But here's the question. Do you really want the other agents to not show your house? Technically they should anyways, like from a moral perspective, but let's be real here. I'm a realist. Will they? Right. You know what I mean? So like, you just have to expect that in your head, you're probably going to be paying 6%. Okay. If you're in Texas, depending on where you are, it's cheaper for some places, but if you're going to cover the title policy, it's roughly 1%, right? So now look at that. That's 7% by the math alone that you're going to have to cover for, your own agent, the seller, the buyer's agent, and then potential other closing costs and things like that you've got to pay. You're now needing probably at least 8 or 10% increase in property to be able to cover that. Will you get it? Maybe. I mean, right now we're flipping to a buyer's market. The first one we've had in a little more than 5 years, right? A little bit pre-2020. We were kind of in like a little bit of a buyer's market, and then 2020 hit and it was off like Donkey Kong, man, like gangbusters. It was crazy town, and it has been ever since. And so this is the first time in a long time. And when that happens, it jacks with those property values. And that means that you may not get the return you technically should get because the market is self-correcting and it's figuring itself out. And so people will panic and freak out. So you just have to think it through. No right or wrong here. Just what do you want?
Right. Yeah. And how much in that scenario, how much risk are you willing to take? The possibility that you might not be able to get what you want or
That's
need
correct.
for it, right?
Oh,
And you could still do it, but you have to understand all the things that can go wrong, all the things that need to happen in order for the ideal scenario to take place, right?
Correct.
And then make a decision. It's all about making an informed decision. And you can only do that when you have all of the facts, all the information, all the things that could potentially go wrong with the deal, whatever. Then you can make an informed decision at that point, right? But a lot of people don't have that information, and they're, again, just basing it on surface level information. And that's why people like me got into trouble when I did, right? Because it was a very surface level decision, and I hadn't really thought through any of these types of things. There was one thing that you mentioned that I'm taking notes here. I thought was really good. You step outside your comfort zone with self-awareness. Like, it's good to step outside your comfort zone, but if you don't have self-awareness, you could actually be setting yourself up for failure. See, like, it's another one of those things where it sounds really good. Just like the house might look really good on paper. Okay. It sounds really good to step outside of your comfort zone, but you don't do it just to do it. You need to have some self-awareness and a game plan in place, to make that leap. If you're going to get the most out of it, then you have to prepare for it. Like some of the things that I've done with infinite banking and private money lending and all that stuff, whatever, all of those things, I was stepping outside my comfort zone because they're major financial decisions. Okay. But I have the self-awareness now. I've done the internal work. Like I know, I reflect on like my understanding of money now and my risk reward tolerance and, just different things like that. So when I take the dive into those types and like make those types of decisions, it's based in step outside my comfort zone. It's based around this. I have this core of self-awareness. Like I understand the decisions I'm making, and I'm accepting the risk based on my risk profile. Right.
I was going to say, risk
really,
tolerance
really
is a big deal. Like, you have to know what your appetite is for risk, baby, because some people have a really big one and some people have a really small one. And so you just have to understand that no matter what it is, I don't care how certain any expert tells you something is, it's BS. Like, there is nothing certain in life but death and taxes. Truthfully, there's nothing. So when people are saying, oh yeah, the interest rates are going to drop, the interest rates are going to go up, the house prices are going to go up, the house prices are going to go down. No, we can tell you what the statistics say, right? Statistically speaking, buying a house is a fairly solid investment because over the course of time, if you look at and you take a 10, 15, 20-year chunk, yes, likelihood is that house price is going to rise and that it will be a good overall investment, right? Doesn't necessarily mean that is exactly what it's going to do, and definitely not what it's going to do in this little teeny tiny window, right? Anybody who invests money in stocks will tell you the same thing. Like, you can't look at it like for this little tiny window. And this is, again, where fear comes into play, because a lot of people allow this to wreck a lot of things in financials, not just simply the aspect of buying a house. They allow fear to really just wreck them, period. You should never be making decisions out of fear, right? Like when your back's up against a wall, like you feel like that's never a good time to make a choice. And so you just need to be very, like I said, self-aware and understanding what your risk tolerance is, and understanding, and some of, in my opinion, what will disseminate fear is education, because it empowers you. It makes you feel in control of like understanding what it is. And no, you don't need to know every aspect of like home buying or whatever, but you do need to understand the big rocks. I actually literally wrote my book, Mortgage 101, The Secret Sauce of Home Buying. And I'll tell you why. I don't know if I ever shared this with you. We save deals all the time. So when deals are falling apart, when people are super invested in a house and the lender didn't know what the hell they were doing, we get to pick up the ball and run with it. And if there's a way to solve the deal, we 9 times out of 10 can solve it. If it's not solvable, and like we will tell them fairly quickly and just say, hey, cut your losses, try to get as much money back as you can and like move down the path. But we save a fair bit of deals. And what I learned is most consumers would have raised their hand and been like, something's not right here, if they would have understood the red flags, like what the main pieces of the process should have looked like. But they don't know. And so they go in thinking that this person is going to have their back, they're going to protect them, they're the expert, and the person's not. They don't know their, ass from their elbow, and then they're now down this path, a huge amount of emotions and money invested, and now everything is going sideways, right? Like, and so I wrote the book because I'm like, look, if you want to use it in my team, great, we want to help you. If you don't, that's okay, but I don't want you walking down a path and then being like, huh? Like, why is this not working right? You know what I mean? Like, why is it not, or whatever? And so I literally wrote it for that reason. So education can really help step back from that fear.
It's such a phenomenal point. And so with financial education, like you said, you don't have to become an expert at every single little thing involved in the process. Like with private lending, when I lend on a piece of real estate, I could teach the basics, but I certainly can't teach it at a level that my mentor taught me, right?
Sure.
I wouldn't consider myself an expert, but that doesn't mean I can't do it, because I know what I need to know to make the deal work. And here's the other thing that I think financial education really allows you to do. It teaches you what questions to ask. So you mentioned like without the education, you don't know what the red flags are. With the financial education, you do. And then you can ask the professional that you're working with about those red flags and put them on the spot. I mean, that's really what they're there for, is to serve you. So if you want to make sure that they're actually the best person to do that, put them on the spot, man. I say this all the time when it comes to indexed universal life insurance. It's a huge part of my channel. You know, we talked about it a little bit on our previous podcast, where like, it's not the devil. Index universal life isn't the devil, just like adjustable rate mortgages aren't the devil. We're going to get into those later on. But here's the thing, is it's massively oversold by people who have no idea how the product actually works. Correct. And people don't know what questions to ask the agent that they're working with to see if the agent really knows what they're doing. Right? The point of this, guys, is financial education is such a key part in really every major financial decision you make. For sure. Which kind of ties me to kind of a good segue into the next part of the conversation that I wanted to dive into a little bit more. And that is to like how you determine if it's actually the right time for somebody to buy a house. A couple of things that come to mind is that financial education piece. Have you done your research, like basic research about the market? Numbers are important, okay, to help determining whether it makes sense for your current financial situation or not. Okay. But there's another part that I think is really important. I'd love to get your feedback, and then you can expand on like some of the things that you look for to determine if it's a good time for somebody to buy a house. I think it's having a really good financial foundation in place. And when I look back, during the time I bought the house, like I didn't have a very good financial foundation in place. Again, because I was so blinded by the numbers of the deal at the time. It's like I had in my mind, what could go wrong? It's like such a perfect deal. Like, I don't need to have the financial foundation that I have today. You know what? And maybe I wouldn't have needed it to the extent that I have today. But having a game plan in place, like I have a very specific blueprint that I follow now when it comes to building wealth. If something were to come up, I know I've got it covered. I didn't have any of that. It was just a blind purchase. That's really all it was. So financial education, having the financial foundation in place, whether, you know, that could be just having a really solid emergency fund that you're building up every single month, a game plan for continuing to increase income. I think people are so reliant on their jobs and getting raises within their job, and that's like their primary source of income. And there's nothing wrong with having a job, but what happens if you lose the job, right? Yep. So exploring different ways to monetize what you already do, right? To kind of insulate yourself from the possibility, the risk of losing that job, right? Maybe using something like dividend paying whole life insurance, my favorite way to save money. It's a really powerful asset for that. All right. Just to me, that's like basic stuff that we're not really taught to do. We're not even taught to assess that part of our life. It's just, hey, great time to buy. Interest rates aren't that bad. Prices are low. Here's a first time home buyer's down payment. Good to go. Right. And that was it. right? So those are some of the things I think would be a really important part of determining whether or not it's a good time to buy a house is, do you have these basic things in place? Do you understand the process of buying a house? And do you have a game plan for continuing to increase income, create your financial foundation? If you don't have that, maybe not. So what are your thoughts on that? And then what are some other things that you look for as a professional? What are some things that you ask people to determine if it's a good time for them to buy a house or not?
For sure. So first of all, I will go back a little bit to the self-awareness piece. So I actually, unlike you, I bought a house similar age to you, 22. I actually did have a lot of the financial education. I understood what I was getting myself into. I knew I wanted to own a home. I knew I wanted to own a home early. And I also knew I had a lot of self-awareness around the potential sacrifice that was going to come with, right? That I wasn't going to be able to do some of the things that 20-year-olds like to do, right? Like, and this is not a knock to anybody who's listening, who is younger, but when you're in your 20s, you're very much in a YOLO phase of your life, right? Like you want to go out and you want to do some of these things that may be considered by older generations a little irresponsible. And there's not necessarily anything wrong with that, with doing that, right? With maybe free flowing a little bit more money than you should free flow at that point in time on some stuff that might be considered frivolous or whatever. But you need to step back and have the self-awareness to realize that when you do one thing, you trade it for something else. And so nothing wrong with that on its face. There's no like shame in that. It's just that is a decision. And so for me, I would have rather done less frivolous things like, you know, maybe going out all the time to bars or to restaurants because I really, really, really wanted to own a home. And so that is one of those things where self-awareness is really, really key. It's no different than you hear a lot of people talk about marriage and, oh, people can't get married young. That's a mistake or whatever. I don't believe that it's a mistake. I believe the reason that most really young marriages end in divorce is because, again, there's not that self-awareness there. Right. You're not making a commitment to growing together as a couple. You're not self-aware of like where you're at and what you want. And so anybody who wants to do any major financial, it's not just house, you know, even a car purchase, like any of these things, like any major thing where you're putting yourself in a fair bit of debt, you need to step back for a minute and take a pause and ask yourself, why am I doing it? Is it necessary? What am I going to potentially have to give up to do set thing? Because there's a yin for every yang, right? Like you make one decision, it affects something else. And so there's nothing wrong with any choice you make. And I think too often people are getting pushed into societal or familial or cultural boxes. That's not necessary. You do not need to fit in the box, but you do need to make decisions in alignment. And you're only going to do that if you step back and you ask yourself, hey, is this really the best choice for me? Like, is this what I want to do? Why am I making the decision? And so often we're not doing that. We're just like, our life is moving fast. Everything is moving fast. Society is moving fast. And so we just have to make the decision. This is what I was told to do. Right. We just need to make the decision. Somebody said, yeah, everybody in my family said this was a great choice. Right. Wonderful. You're the one who has to live with the consequences. So do you like the consequences, good and bad? Right.
I just want to touch on one thing really quick, and then we'll get into, we can continue with like some specific things that you asked, but that the idea you talked about like the older generations like considering things to maybe be irresponsible or whatnot. Like in your situation, you wanted to buy the house. If you were to ask, like if I did some real introspection at that time and self-reflecting, I didn't actually want to buy a house.
Right.
I didn't want to be locked down at 21 years old. I wasn't even crazy about what I was doing for a living at the time.
Absolutely.
Right. So I'm not 100% sold on my career. I'm not really sold on the idea of buying a house. I'm just doing it because of the numbers. Right there should have been the major red flags that would indicate to me because to not buy the house, because I ended up going to Las Vegas afterwards. And it's like, well, what did you buy the house for? Right. And the argument could be, oh, you turn it into an investment property, but I did that and I still lost it. Right.
Well, but you did that because you had to, not because that was aligned. You rented it out because you didn't have
no choice.
So when you look at it that way, that was not in alignment with what you wanted. And so often, I mean, I'll never forget that. I was married very young. I got married at 21. I was divorced by 24. I knew what I want. He thought that I was a good preset checklist of things. And so that's really not why he should have married me. So again, he wasn't in alignment. So we get divorced. Right. I'm dating this guy, and I'm really good at like dismantling people, like kind of understanding like what is making them tick and why they're making decisions. I don't know why. I just have always been able to do it. And so finally I just asked him, I was like, do you have any desire to like be married, have kids? And he's like, no. I said, so then why are you seeking that? He's like, well, my mom really wants. And I said, I'm not trying to be rude here, but who cares? Like, is your mom going to be around for your entire life? Like, is your mom paying your bills? Is she, you know what I mean? And like, I know that that's hard. Trust me. I have a very, very strong family where they like to give very strong opinions and they like to try to force them down your throat and all the things. So for those of you listening who are like, easy for you to say, no, not easy for me to say. Like my mom, I live with her right now, and she constantly like yaps in my ear about what I should be doing versus what I am doing. I get it. It's not easy. You still have to make choices because ultimately at the end of the day, you're responsible for whatever decisions you make. And if you're not good with them, they will often end up having bad consequences, not because the decision was wrong, but because you're making it out of a place of misalignment. And that misalignment is creating turmoil on multiple fronts. Financial is just what's going to eventually bubble up. But emotionally, like spiritually, like there's lots of like things that are going to create challenge in your life if you're not figuring out that alignment and that self-awareness.
So true, man. It's such an important point. Like I compare what I do now with my finances compared to what I was doing back then, and it just flows so much easier, so much better because it's in alignment with my goals, my values, my beliefs around money. It makes such a huge difference.
Part of the reason that I started the podcast and that I started doing some courses and stuff like that and like stuff about self-awareness around money specifically is because people in our society are obsessed with it. They're like money, 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 money. Okay. And I use this example all the time. And my brother knows that I use this example. My brother and I raised in the exact same house, more or less the same general financial situation. You could actually argue that he was raised in a more well-to-do because my dad was making quite a bit more money by the time he kind of came up because he's 4 years younger than me. We have totally different pictures of what we want for houses, financials, what we want to do with our lives, you know, all of these different things. And I say all the time how proud I am of my brother because he has come up against heavy resistance from my parents about why don't you want this and like all these things that they have these ideas in their head that he should want. Good for him for finding alignment and knowing, no, this is the life I want to lead and I'm going to lead it. And it's so incredibly important. And I see that a lot with people because again, if you're going through the home buying experience because somebody told you you should own a home, that's not a reason, baby.
Right.
Yeah. It's just not a reason.
Whether it's your direct family, friends, society in general, doesn't matter. So let's, I want to dive into, just give me like some of the more, I guess, revealing questions that you ask people when you first start working with them to determine if this is a good time for them to buy a house. And then I want to shift and ask you, like, do you consider buying a house an asset or a liability? I want to have that conversation next. I think that's going to be really good. But give me like one or two high-level questions that you ask that are the most revealing to determine if someone is ready to buy a house.
So we ask them their motivation. Like what is your, basically what's your plan? Like what do you want? Why do you want to own a home in essence? Right? Like we're kind of trying to look to see, to peel back and what is their plan, right? They want to be there for a year, 5 years, 10 years. Like what does that look like? Because number one, it tells us if this is a good time. Number two, it helps us frame up the advice and the type of loans we're going to look to potentially utilize, the suggestions we're going to make. And so self-awareness for us is a big piece of it. The next piece is when they're filling out the application, which a lot of times is actually happening first, because before I can have an intelligent conversation with you, we have to know what your numbers are. Like I can't We can speak in hypotheticals all day, and I could tell you, oh yeah, you should definitely look to this or whatever. But if the numbers and the math doesn't track, it doesn't really matter whatever conversation we had. So I always heavily encourage people. I know that's not the fun part, but you got to put in the application and upload your documents so I can actually really look at what we're dealing with, right? Like, where's your credit at? So sometimes it's not necessarily a question I'm asking, it's what I'm seeing, right? So like, what are the numbers telling me? Because oftentimes, and I'm just going to tell you right now, anybody who's listening, you typically will qualify for much more than you should spend. The math typically will allow you, because the way that we do our calculations, if you go to the max, very oftentimes you're going to be heavily over leveraged.
Right.
And it is going to put you in a box, a big box, and it's not going to necessarily be a good one. Now, there are some caveats here, right? Maybe somebody's credit's not great. We're excluding them off the loan. So it looks like you're heavily leveraged, but you actually do have another income source. Maybe we have an income stream we can't count. So on paper, it doesn't track. I can't use it, but you actually have it, right? So like you have more money flowing in the door than what I can actually utilize. I'm just saying, as a general rule, if you are a W wage earner person and you are in the process of getting qualified and your loan expert tells you this is your max qualification, your next question should be, what roughly will my monthly payment be? Because I can almost bet you money it will likely be more uncomfortable and for you than you're willing to spend. That's another thing that I ask people up front too. In your ideal world, what will your monthly payment look like? Because if your monthly payment is way under what I know the pretty much baseline monthly payment's going to be for the lowest price house in your whole area, I can pretty much tell you, unless you come up on that or you are going to be more comfortable with it, you're probably not in a position yet to buy. And that's okay. But like, we need to have the conversation of figuring out like, okay, here's what you kind of are expecting and here's what reality is. We do a lot of that. We do a lot of expectation setting of like having conversations surrounding where you're at. What do you want? What does this look like or whatever? And if you're going somewhere and they're not asking you questions, if they're only letting you fill out an application, spitting out an approval letter, letting you go find a house and putting you in a loan, this should be a giant red flag to you because
100%.
Yes, the paperwork may track, but it's no different than, I have a huge problem with the way that the car industry handles it. Like, great, you might qualify to buy the car that has $1,000 a month monthly payment, but think about that for a minute. You're going to pay $1,000 for, usually it's going to be at least 60 months. Now they can stretch up to, what is it now? It's like 8 years or 7 years or something.
Yeah, I just saw it the other day. It's like 8 years they offered her to buy to finance a car. It's a long time.
And so, you just have to look at it, right? And so, yeah, of course, everybody wants the big, shiny, brand new, beautiful car or whatever, right? Like, yeah, of course that sounds great. But you just have to step back and think it through. So I'm not telling you not to do it. I'm just saying you need to look at it. And like, again, ask yourself, if I buy this car that costs this much money a month, what am I giving up?
Yeah.
And if you're good with it, I'm not running financials, baby.
Is there like a baseline percentage or dollar amount or something like that you utilize to determine if they can afford the monthly payment? So for example, I was listening to a podcast the other day. The gentleman said, after all your expenses, including your mortgage, if you can't save 15% of your income, you're probably not ready to buy a house. That's kind of the formula that he uses, I guess. So do you guys have a formula for determining that?
We don't, but that is, that's probably a good rule of thumb. That's the other thing. So what you have to understand about mortgage calculations is we go by gross income, not on self-employed. But if you are W-2 wage earner, we're looking at your income before anything comes out of it. Taxes, before any of your retirement comes out, before any of your health insurance comes out, before any of these things pull out, right? And that's what we're qualifying you based off of. So that's why he's making that call, because what's happening is a lot of times what mortgage is not taking into account is that you have chosen to heavily fund your retirement account. And so you're putting in 20%, 25% of your income or whatever. Well, we are not looking at that. We're looking at gross, right? We're looking at this higher number. And so you need to kind of step back and ask yourself, okay, at the end of the day, if I pay all of these things or whatever, how much does that leave over? And is this enough to fund whatever it is that I'm good with, like however much I want to put in my savings account, my retirement account, or whatever, because I don't necessarily think that there's a hard number there. And the reason I say that, like, I think it's hard when you go by an actual percentage, because somebody who's making $4,000, let's say a month gross, that 15% percentage, they might need a little more actually. Whereas somebody who's making 20 grand a month, they might need a little less than 15% and be okay.
Right.
You see what I mean?
Sense.
So there's a little bit of a sliding scale, but you do definitely need to bake in. If you're going to be to the point where it's going to be strapping to make that, the other caveat that I will make is you need to expect that your payment is going to increase. Not necessarily a huge amount, but I tell people all the time, your taxes and your insurance will go up. It's not if, it's simply when. Okay. Because think about it. Inflation, like I live in Texas. So we've got hail out the yin yang and all the other kinds of named perils that we have here, tornadoes, hurricanes, all the other crap. So your insurance is going to rise. How much will be dependent on a lot of things, right? Inflation, how many, storms and things we've gotten hit by, things like that. And then property taxes. Let's be real. How often do your property taxes ever going to go down? I mean, occasionally.
Well, if you're in Florida, they might be getting rid of them, just so you guys know.
Right, and that's always a possibility.
In general,
in Texas,
that's probably not going to happen. It's very rare. But in Florida, it's
they did.
But in general, you're right. It's going to increase.
So we do have if it's a primary home, we have a homestead exemption in Texas, and they did just up that amount. And quite a few states have homestead exemptions. Texas, I do most of my business there, so that's why I'm speaking to it. But they actually did just increase it. So there are times when it's going to go down. I just wouldn't bank on that. So I always tell my customers, if you don't feel comfortable that you could have, $50, $100, maybe $200 more a month to throw at the loan, then you should also be like, oof, is this, where I'm at, right? I highly encourage every single one of my clients to go ahead and at least round up, right?
Okay.
That's, by the way, just one really quick point. That's a really important reason to also work with an expert. I can tell you in states that have heavy property tax, like Texas, it will make or break you if that expert jacked up your escrow account. So that's the thing that pays your taxes and your insurance. It can really jack your payment up big time, very, very quickly.
Right.
Big time.
It's good to know. It's one of those variables that you can't control that you need to account for. Because the numbers might look good right now, but are they going to continue to look good based on the track record of, in this example, property tax increases, right? So that's definitely a factor to consider. I like asking the question, like, if you were to have this X amount of mortgage every single month, like that 15% savings, that's just kind of like a baseline number, but everybody's situation is going to be different. But knowing what that payment's going to be and how it's going to impact your ability to continue funding your 401k or building your emergency fund or whatnot. Because if all of a sudden that mortgage is eating up all of that money and you can't continue to do it, well, you're kind of stagnating at that point in the best case scenario. Worst case, you're actually falling behind because you're not contributing to your retirement and financial future, your financial foundation, as much as you probably should be. Because again, also another thing, like owning the house, there's going to be things that go wrong with it. Are you financially capable of handling those things without having to go into debt? See, a lot of people don't, which is why I mentioned the financial foundation earlier as a big part of determining whether or not it's a good time to buy a house. Because the last thing you want to do is commit to a 30-year mortgage, 30 years of debt. And now you have to take on high interest rate credit card debt to fix the AC, plug the leak in the roof or whatever, because these things happen. If you don't have that, well, you're kind of screwed. So if that payment is going to really start to stretch you every single month, like Jack said, might not be the right time. There's some other things that you need to work on first before you make that commitment.
Well, and let me talk to this is also where being diligent and being aligned matters a lot too, because a few things. Number one, you were talking about having to potentially make repairs. Keeping an active oh my gosh, my brain is gonna home warranty in place. No, it's not gonna necessarily like pay for everything, but it can help, like sort of bridge some of the gap. So that can help some people. If you're fine self-funding, that's totally fine. Just make sure that you're in a good spot there. And then two,
Right.
we don't know what other things are happening in your life outside of the financial container we're given. So what I mean by that is for instance, you know that your car is 15 years old and on its last leg, and that you may have to be taking on a car payment here in the near future. You need to think about that when you're buying a house, right? Like, no, I'm not calculating it in your debt to income ratio because guess what? It doesn't exist in your debt to income ratio right now. But if it's going to have to exist, you need to think that through, right? Like, okay, what is that going to potentially look like? If you know that your intention is to have a family and that one of the people in this relationship are not going to work because they're going to take care of that child, okay, now we have another financial kind of wrinkle that you need to think about and consider. So this is again why understanding your personal situation matters so much, and being able to relay the information to the experts, because we can help you hugely if we know. But if we don't know, if you are shielding like us from stuff because you think you're being helpful, I love this, by the way, when people think they're being helpful, because they just don't tell us about what the situation is. I'm like, guys, you're setting yourself up for failure, because I can give you insight and I can give you thought processes and what I might do or what I think might work best for you. But if you don't tell us that, how the hell are we going to know?
Right.
Like, I'm not omnipotent. I can't just like drop inside your head and be like, oh, yeah, see, that's what they wanted to do.
And at that point, you're not making a decision based on all the information and factors involved, and that's where people get into trouble. So 100%. Let's wrap up with this final piece. I wanted to touch on adjustable rate mortgages. Maybe we can do a separate segment on that. I don't want this to be. I want to be respectful of your time. I don't want to be too long. But let's see how fast we can get through this. I wanted to ask you: do you consider buying a house? You alluded to it earlier, calling it an investment. Do you consider buying a house an asset or a liability?
I think it depends on how you position it, personally. So if you look at it from a purely number standpoint, if you're looking at it from how it adds to your portfolio, what your plans are with it, how you are positioning, increasing the equity by either paying it down sooner or improvements and or, whatever, all these different things, it absolutely can be an asset. I think for a lot of people, it is a liability because they don't think it through. So a lot of this is, again, going to come back to alignment and positioning and how do you utilize it. I feel like it should be an asset if done correctly, if leveraged correctly, if utilized correctly. But I think for a lot of people, it does become a liability and even a little bit of an albatross around their neck because they haven't done some of these things. I'm going to give you a very specific example, something that actually came up very recently in a situation that I'm not going to basically, talk because I have financial kind of privacy rules, right? But we were dealing with a purchase of a property for some borrowers of ours. And the woman who was selling the house, she was in a really tight position. She'd only bought it a couple years before. She didn't really have almost any equity, and she had lost her job. Not much financial contingency there as far as, what she had kind of in savings, whatever. And the house had gone under contract. And this is, again, where picking experts comes into play, because unfortunately her seller's agent did not do the math correctly to figure out. And so she was actually contracting in bad faith because she actually could not sell the house without bringing a fairly large portion of money to the table that she did not have to bring. And so this is, again, so for her, that house is 1,000% a liability. She probably bought that house. First of all, they did not set up the escrow account correctly. How do I know? Because her escrow account, she was over $6,000 in the hole on the escrow account. And so that tells me that the original mortgage company did not do their job properly. And she also did not have her house homesteaded, even though it was her primary residence. So nobody told her how to do that or set that up. So again, this goes back to not lack of education and lack of experts trying to help. And so that made her taxes even higher as well, right? It put her in hardship because it made her payment go up. and now she's being forced to sell, and she doesn't have the equity to substantiate, right? And so a perfect storm of things.
Yeah.
So can it be an asset? 1,000% it can. But if you're not positioned correctly, it 1,000% is a liability, because it is the largest debt that you hold. It is the largest chunk of money you will pay out every single month. And it can absolutely damage you for a lot of years. Because if you have a foreclosure, stays on your record for roughly 7 years, you can get a loan, but it's usually going to be at least 24 months. But that's extenuating circumstances typically. And then typically a little longer, just depending on the loan type and things like that. But it's definitely going to put a little damage in your overall financial picture from a credit perspective, for sure.
Right. So I love that answer. And the reason I wanted to ask it is, again, it's one of those things that it's like one of those sacred cows when it comes to financial literacy. Is one of the best ways to build wealth is to buy a house, right?
For sure.
Dave Ramsey talks about this quite a bit. I've done videos like specifically breaking down this concept of like, is buying a house a great way to build wealth? And I really like your answer and appreciate your answer, because there's both sides that I hear. So like you got your Dave Ramseys of the world that say absolutely 100%. It's a great way to build wealth. But then if you read Rich Dad Poor Dad, Robert Kiyosaki, he actually says that your house is a liability. And it's just kind of this blanket statement. And obviously there are nuances to everybody's situation. So but the main reason I wanted to bring that up though, is again, to get people to kind of push aside these general principles that have just been shoved down our throat about building wealth. And let's start asking some better questions. Like, to you guys listening, have you ever asked yourself that question? Like, hey, is this actually an asset or liability? And how would I know the difference? How would I know if it's an asset or a liability, instead of buying it based off of what somebody told you, or not buying it because you think it's just a liability? So with regards to it being an asset, this is the way that I see it, at least a couple of aspects to it, is one, you have, you build equity over time. Okay.
For sure.
It's something that, again, if you utilize it correctly, you can tap into, for example, a home equity line of credit, use that to purchase an income producing property. So now you're starting to introduce a little bit of leverage here to accelerate the wealth building process. Now, if you take the same amount of money and go on a 6-week vacation in Europe, I mean, sure, you're living a life. And I suppose if you can afford that, great. But is going into debt to do that a really good idea?
For sure.
Utilizing your house? Probably not. All right, so that could be a scenario where maybe the house is an asset. All right, where it can be a liability that I think people need to be aware of. You had some great examples there. I'll just touch on a couple of other things. Is one, that house is going to cost you a lot of money. Okay, I'm not talking about just the things that can go wrong. Okay,
yeah, for sure.
That eat up like how much you actually can make on the property, assuming you sold it, right? Right. $6,000 for an AC, $10,000 for a roof, like whatever. This thing is going to cost money to maintain. Okay, that's number one. Number two, assuming that, because I don't think a lot of people can do this, is make extra payments towards the mortgage. If you go through, even if you did like a 20, 25-year mortgage, like you were to pay it off a little earlier, you're likely going to buy the house twice, pay for it twice.
Yeah,
when
for
you
sure.
take how much principal and interest you've paid, you've now paid for that house twice. Okay. So, and also the textbook definition of a liability is something that costs you money every month, right? Typically your primary residence is not generating income. Assets are things that, not all of them, but things that typically produce income for you.
Yep.
Your house takes money from you. Okay. Granted, you're building a little bit of equity over time, but that takes a long time to really start kicking in unless you're putting down a good amount of money.
For sure.
So it's not that it's one or the other. I would say it can be both depending on how you're utilizing it. And even if it is a liability, that's not necessarily a bad thing, as long as you know what it is and you're in a good position to buy the house financially. Like it's okay to have liabilities. Liabilities aren't the devil. Okay. But liabilities without preparation, without a plan in place, that's when you get into trouble. What are your thoughts on that?
Yeah, the thing that I was going to tell you is that I say all the time that owning a home is one of the largest wealth differentiators there is. And statistically, I am backed on that. And a lot of the reason, truthfully, is actually financial irresponsibility. And so I'm going to explain my
Right.
statement. So a lot of Americans, period, they are not diligent about their savings, are not diligent about um, understanding financials. And so they're just kind of moseying on through life and whatever. And the truth is that think about it. Let's say that you buy a house when statistically everybody says you should, or like what statistics says that people buy a house at, which is about the age of about 32. Okay. So now play this out. You take out a 30-year mortgage on the house. And let's say that you don't take out any more money. Let's say you just make that payment, the regular old payment, the entire 30 years. Well, then you would have a house paid off, full free and clear by the time you retire, which most people is around 62 to 65, right? So you'd have this house paid off. Now you're only paying taxes and insurance. And so the biggest expense that you hold, which is typically housing, has now been eliminated in essence. Not quite eliminated, but like reduced very significantly. Right. And potentially, if you bought a bigger house than you actually needed, you actually could sell that property and move into something smaller. And now you would still have a little bit more lump sum or whatever. Right. This is typically why it's a large wealth differentiator, because if you don't, then you end up in the position where a lot of older people are right now who haven't ever bought houses, where you don't because their social security is like something super low. It's hard for them to even be able to pay rent with it. You know what I mean? Like that's a big struggle. And so I think a lot of times people have this idea that they're going to just, oh my gosh, like, you're going to make gobs and gobs of money off owning homes. That's not necessarily true. It can be if you're very strategic with it and your positioning and how you handle it, all of these things, that part is true. But it is as much of a liability as it is an asset in a lot of ways, right? I tell people all the time, this is my thing that I highly encourage people. Remember, I told you that I think that you should be able to make at least $50 to $100 more in payment every single month to your mortgage. And the way I always tell people to look at a 30-year mortgage is like this. Imagine two equilateral triangles, so exactly the same shape, one facing towards the ceiling and one facing towards the floor, and you shift them together. The big fat part of the top triangle, that is the amount of interest you're paying at the beginning. And the little teeny part of the triangle is the amount of principal. So anything you can pay extra at the beginning matters huge. And so I always encourage people, pay as much extra to principal as you can at that beginning, because it will start eating down like the amount of interest that you're paying over the life of the loan. And you actually can help kind of control some of that. So just, again, it all just goes back to alignment and things like that. I don't like blanket statements ever. It just really pisses me off because I'm like, nobody is the same, right? Like
everybody's
your way and my way and I'm like, and so there's general principles that we all have to hold and follow, right? But they don't all have to be true for you. And no expert, no matter how smart they are, can make the decision for you. It's why PBJ's our core values are educate, empathize, empower, because I can't make the choice for you. I should give you a few well-aligned options with what you've told me, and you should make that choice, because I do not stroke the check, and I do not know what's going on behind the scenes, right? I don't know any of that.
100%. I love it. Yeah, and it's why that I think another reason the self-awareness part, having the plan in place, is so important, because we have these assumptions that, oh, if I do buy a house, that perfect case scenario you described, where the house is paid off, you could sell it to downsize a little bit, you got this big chunk of cash, that's automatically going to happen just because I buy the house. Well, no, you have to make it to the finish line in order for that. And there's a lot that can happen over the next 5, 10, 20, 30 years that can completely disrupt that end result if you haven't properly planned and put a foundation in place before making the decision. It's similar to retirement planning, where people just assume that, hey, if I put a few $100s a month into my 401k, I'm going to be rich by the time I'm 65. That's not the case. There's, again, a lot of things that can happen that can go wrong to where you won't have enough money. You won't end up with enough money in retirement. If you're just if you're just assuming that if I just do this, I'm automatically going to get this end result. That's not the case, guys, because there's so many different factors involved. And that's why I wanted to have this conversation. It's been absolutely fascinating, Jax. I do want to be respectful of your time. We're hitting that hour mark. I think if you're open to it, I'd love to get you on the channel again to talk about interest rates, different ways of different strategies for paying off the house earlier. I really like the idea anyways of budgeting yourself, like, or not maybe budgeting isn't the right word, but factoring in an extra 100 or maybe even $200 a month above and beyond your mortgage, like having that be part of the decision so you can start to pay this thing off earlier. I'd really like to explore that in more detail. So maybe we could do another episode on that.
For
but
sure.
With that said, let's wrap up. Where can guys, I'm going to put all of Jax's resources and things in the description, but just give us a rundown really quick, Jax. Where's the best place people can find you and potentially work with you?
Yeah, for sure. So if you're looking to just learn more, so you want to understand more about mortgage or financial type things, you can always listen to my podcast, which is Financial Mastery Simplified. You can find it on pretty much any major podcast platform, as well as on YouTube. You also can go to PBJ Mortgage TV. It's my other channel. It's very mortgage centric. It does have some financial stuff mixed in there, but I would say as a general rule, it's a lot of very mortgage kind of more centric stuff. PBJ Team, like TEAM, so PBJ like the sandwich team.com is our website. So you can always go there. You can apply, book a call, like whatever that is. If you really want to understand soup to nuts what the process is. So you're looking to buy a house and you want to understand like what that process is, anybody, and I'm going to make sure that you have the link, can go get a copy of my book called Mortgage 101, The Secret Sauce to Home Buying. If you do not want to read it, but you want to listen to it, you can actually go on Amazon and there is an audiobook. I know some people are more audio listeners, so I made sure that was a choice as well if people want to listen that way. But the biggest thing really is, guys, regardless whether you use me or any other mortgage professional, just make sure that you have done your due diligence to do your self-awareness. I think home buying really is one of the best things ever. I believe in it so firmly. That is why I have stayed in this industry for as long as I have, because trust me, it is very cutthroat and very exhausting at moments in time. But I really, really care about people being able to own that piece of the American dream, right? And so you just need to be diligent about knowing when the right time is and making sure it aligns with you. And anybody who's pushing you outside of that box and forcing you to do something you're not comfortable with, that's not somebody you should be aligned with and that you should be utilizing. So I can't encourage you enough. If I'm not your person, that's okay. But make sure you for sure find your person. But thank you so much for having me on. I love talking about money. I could talk about it all day, and absolutely I'd be happy to come back and talk all about all kinds of tactics, and you get in all kinds of weeds with me. Like, I understand how loans are securitized and how they're serviced, and I'm a nerd, so I like to understand how all the pieces work.
I'm the same way. Sounds like we have a lot of potential episodes that we can do. So, Jax Kreider, it's been an absolute pleasure. Thank you so much for sharing your knowledge with us. Guys, make sure you check out all the resources in the description. And Jax, looking forward to the next one.
Sounds good.